Good morning, America. Thank you for watching Taxes Made Easy. We are very excited for today's show. Um, and again, this will be the last show on the TV station as, again, work obligations have changed where I'm going to have to be focusing more on work. But we're going to really hammer down on the five most important things you can do and just summarize them for you so to avoid any kind of tax issues. And if you do have any tax issues, make sure things are cleaned up. And just kind of a quick little roadmap here to make sure that you address any issues and that you don't have problems moving forward. Because really, that is truly our goal here is to make taxes easy for people. That also includes resolving thorny issues to make it easier for you, so that you can find peace and move on with your lives because taxes should not dominate your lives. So we'll be right back for this commercial break. Welcome back, everybody. And I got a lot of news to cover. We're trying to gonna try to go through it quickly, but to kind of summarize things as we go through. First piece I actually think is pretty important, and this goes to charitable giving. This is from irs.gov. Give more tax-free eligible IRA owners can donate up to $105,000 to charity. And so if you're age 70 and older, you can make a tax-free charitable donations up to $105,000 in pre-tax dollars that was put in your IRA. So again, it gets a little tricky here, um, but they remain tax free for qualified charitable distributions if they're sent to a qualified charity by the trustee. So if you have this set up, now is the time you can still make the charitable contributions and benefit some great local charities. Again, it is very important that we help not only help local charities, but again, individual donations really do make up the vast majority of how we support not only social welfare, but also charitable giving for all kinds of amazing programs. I'm going to do a quick little plug for one of my favorite charities, which is Junior Achievement. And Junior Achievement helps K through educate children K through 12 in financial literacy. All the things we wish we would have known back when we were kids. If you want to help change someone's life, teach them to manage money, and again through high school, and then to how to start, launch a business, and understand how the economy works. So it's an amazing program. I love it. Junior Achievement. That's my plug for my favorite charity. Moving on, there's some of the things. There's a lot of push now in the last couple months, or really, of President Biden's administration. And one of the big pressures here is to commute sentences of dozens of death row inmates, including Boston bomber. Now, this article is coming from the Daily Caller. People aren't happy. I mean, this is a more left leaning article. No, I'm sorry. The groups pushing for this are more left leaning, of course, but the article comes from a little bit more of a right wing position. And the death penalty is a tricky thing, and there's people on both sides of the aisle that just don't think that the federal government or the government should have the opportunity to execute people. I mean, it's always happened through history, but is that something that should be a relic of the past? I don't really want to opine on whether or not we should have the death penalty. I just think it's interesting how, um, again, this is something that might happen, and again, this would uphold his campaign promise to help abolish the death penalty. He won't be able to abolish it, but he can throw it back by commuting everybody's sentences that are already on death row and haven't been executed. So, and again, they're saying he had 4 years to do mass from the right. That doing so would be kind of a spit in the face of the election we just had. People do it all the time. They do last minute. pardons, commutations, typically when they're on the way out. Trump has said he wants to expand the use of the death penalty for child rapists, drug dealers, and illegal immigrants who kill U.S. citizens. That's a separate issue altogether. But again, no matter where you sign on, there are definitely some organizations pushing for this. Death Penalty Action, Amnesty International, Human Rights Watch, and the NAACP, and as well as there are some faith-based groups like Catholic priests and some other ones that have signed on. So, one of them would be on death row's Dylan Roof, who went into a black church in Charleston, killed 9 people. So I don't have a lot of sympathy for him. You have the Boston bomber. You have plenty of others, and currently there's 40 federal death row inmates that this would affect. So who knows if he's going to do it? I don't think it really matters in the big scheme of things, but it does matter to people that firmly believe that we shouldn't have a death penalty. So moving on to the next article. And this one is a very different take. We're going to jump over to Europe again. It's like every other day there's an article about the EU fining Facebook or Google or Apple, one social media giant after another. And this time they're hitting Facebook Marketplace. And I don't have a lot of sympathy for these social media giants, especially Google and Microsoft. That's my knee-jerk reaction. But they're hitting them $840 million for what? For claiming that they're forcing people to use Facebook Marketplace. And Meta, Google's responding, or Facebook is responding that people use Facebook because they want to, not because they have to. I mean, nobody's forcing them to use Facebook Marketplace. It's just convenient if you're already on Facebook. And so, just kind of going. I mean, it's a fine of 797 million euros, so a huge fee for abusive practices. What are the abusive practices? That they tying its online classified ads to service to the Facebook Marketplace, help promote it and encourage people to use Facebook Marketplace. Is it a competitive advantage to tie the two together? Probably, but I know personally I use all kinds of online resources. My favorite is not Facebook Marketplace, even though I do use Facebook. Craigslist is still my favorite, to be honest. But there's so many others, and this is one of their points: is that they have a lot of, the fine was initially issued 2 years ago, and they're losing on appeal here, and they point out that there's plenty of competition. In August, British government's Competition Markets Authority to include an exception for this, but I mean, it's just their main point in it from Facebook. It ignores the realities that there's plenty of competition here, plenty of other companies, but doing this, and that people were doing this organically from the very beginning on Facebook. They were creating their own groups, they were selling things, and Facebook just organized it. So, love it or hate it, I think it's interesting how it's being regulated. I think on one hand, putting controls and rail guards on what social media companies are doing can be a very good thing, or it could be, as they claim, it just shutting down competition and making it harder for people to actually compete and have more options. So let's see which way that. Well, it looks like Facebook just got slammed with that, and we'll see where they go long term. Next article, got a couple articles here dealing with major mayors across the country. This one, Mayor Johnson promised in his his mayoral run, that he would not raise property taxes. He was elected, saw the mess that was there, and said we need a huge property tax increase just to balance our budget. So it was so he first day of budget hearings. What does the city council do? Yeah, they already have another plan in place, so this is more of a show vote. But they voted 50-0 to kill his proposed $300 county property tax. Welcome, new mayor. So, yeah, again, it was mainly symbolic. They already have negotiations to reduce or eliminate the property tax increase and replace it with a bunch of other programs from the federal government to a mix of new revenue and taxes. So, kind of entertaining here. But again, it's the ongoing struggle by localities. And this is something that happens locally across the country to save money and balance budgets with inflation going up. It is hurting cities and it's hurting local budgets. It's a real issue, which ties directly into our next article here. Big City Dem Mayor. Who are we talking about? Of course, Eric Adams of New York City says he is optimistic about Trump border policy. And so this is very interesting that just before the election, the top two aides were resigned. They were investigated and their homes raided by the FBI. And then he's been indicted. He's fighting that. And again, depending on what happens when Trump comes in office, that indictment might go away very quickly. And he's come out and saying the voters can be loud and clear. We have a broken immigration system that needs to be fixed. And he claims that that it has already cost New York City $5 billion over the past 2 years. That's a lot of money for a city. Doesn't sound like a lot when you're talking about the federal government, but for a city, even New York City, that's a huge hit. And that number is expected to double by 2025 under the current costs. So again, it's costing New York City taxpayers billions of dollars. And Adams has spoken out against it, and they're claiming that's why he's being investigated by the FBI, is because he dared to speak out against the Biden administration. Whether or not that's true or not, who knows? We'll see what happens moving forward. And I have time for one more article. On the flip side of things, because try to be balanced here. You have Democrat Mayor Johnson from Chicago again talking about the threat, and he says that the threat to deport families is a threat to Black families. Not sure how, but again, this is part of it is his reaffirming to keep Chicago a sanctuary city. So again, if he does this and is able to keep Chicago a sanctuary city, and certain states that want to maintain their sanctuary status, again, you'll see a flow of immigrants, illegal immigrants there to those cities. But again, the federal government is vowing to double down and double the number of agents in those cities if they do not cooperate. So let's see what happens. A lot of changes could help or hurt in a big way. So we'll be right back after the break. Welcome back, everybody. And got one more article that's continuing this. And I kind of jumped through this last article. I want to touch on it real quick. There's a lot of people, and this article focuses on some of the pushback against Johnson's comments referring to Trump as a tyrant, and the plan to deport large numbers of illegal aliens as unconscionable and dangerous. And there's a lot of people that feel that way. That a lot of people came here for a better life, and I think that's a majority of people coming in the country illegally. They want a better life for their families, for their kids. But on the flip side of that, you have a lot of criminal transnational crime groups coming into Chicago and coming into contact and causing, with notorious local gangs, and it's going to create a huge turf warfare. So we can see crime go through the roof. This is something that's already started to happen. So you have Tyron Mohammed, founder and CEO of Ex-Concert Community and Social Change. Doesn't sound like a right-wing group. warning that the city might soon go up in flames because of conflicts between the Venezuelan gangs and notorious local gangs fighting over turfs. So, they've already arrested at least 30 TDA's members, but again, this is just starting. So, Holman, who's been former ICE director, he's been tapped as the administration's borders are. He stated sanctuary cities are sanctuaries for criminals. If you're not going to help us, get the hell out of the way because we're going to do it. So if we can't get assistance, we may have to double the number of agents we send in New York City. And he pledged to send a flood of agents to sanctuary cities to rid the country of criminal illegal aliens. So Mohammed is actually on board with this. He says, we're going to be on ground with them, Oman, to remove these illegals and these migrants, identifying where they are because they have greatly diminished our way of life here in Chicago. How have they diminished the way of life? I mean, is that fair to blame it all on them? You could argue no. Again, they're coming for a better way of life, but it's just economics. Sorry, eating yogurt between breaks. That when you have more people, you're going to have more demand for housing, more demand for food. It's going to cause inflation. Again, it's printing money is the number one cause of it. But when you have higher demand, more people demanding the same or slightly more goods, it's going to cause inflation. And it crowds, especially in poor areas like Chicago. You've seen people shoved out of housing. Where a lot of the rentals have been taken up, and it really has hurt your average citizens here. So this article from the National Post, which is a right-leaning source, he doesn't really admit that illegal immigrants suppress wages. He actually makes a different argument here. And so he's arguing, and let's go with their words. I hope Trump will get the message from this election and justice program so it is not inflationary. And he said, I think every sensible American thinks we need to do more to secure a border. But if you're talking about deporting millions of people, that is an invitation to a labor shortage and bottlenecks. Basically arguing that businesses can't get workers if you deport all the illegal immigrants. So again, we've seen this argument many, many times from I can't think with the corporations, corporate lobbyists. I'm completely blank. Chamber of Commerce's. There we go. Chamber of Commerce's. That we need the cheap labor from illegal immigrants. However, the truth behind it, an inverse way of thinking. So they're taking his words and reading into it, which again is just saying if you have labor shortages and bottlenecks, that might be a good thing because if you want to artificially, California just raised their minimum wage again. Minimum wages have been increased across the country, but if you truly want real minimum wages that make sense, flooding our businesses in our country with cheap labor doesn't help the people that are actually competing with that labor. And one of the concerns here, and this is a real concern, the government data shows that a large swath of native-born American workforce has been replaced by foreign labor under Joe Biden. A lot of the job growth, which has been anemic at best, has been with foreign-born labor. Illegal immigrants come into the country, and again, low to no growth among American citizens, which is why people are reacting the way they are. Again, potentially increasing the downward pressure on wages further. So jumping to kind of a funny story tied to this, if you remember they're eating cats, they're eating dogs from Springfield, Illinois. Ironically, Springfield, which has been a Democrat city for decades, this is the first presidential election they voted Republican. Why would they do that if they voted Democrat for decades? Because they're seeing firsthand what's happening with illegal immigration coming to the country. So, last article, this is kind of funny more than anything else. Illegal aliens said something about Trump that stunned the CNN reporter, and we're going to listen to it. Okay.
If you get deported, would you regret your support to Donald Trump?
No me arrepentiría.
He's saying that he wouldn't regret supporting Donald Trump. So you're really not thinking about yourself. You're thinking about your children and the future of your children.
Yes, I want the better for my children.
So very interesting here. It doesn't say that he voted for it. Nobody can, town hall being from a right-leaning thing, very right-leaning perspective. This is something that's really perplexed the leftist media as to why would new immigrants and Latinos in general tread more to Trump. Kamala Harris still got the majority of Latino votes, but again, Trump has made massive inroads with Latinos, with other minorities, and the question is why. I mean, this kind of perplexes them. And it's interesting the way this video shows that she almost put the words into his mouth. But I speak Spanish, so that's what he was saying. He wants a better life for his children, and his concern is looking forward, which presidential candidate did he think would provide a better life? And so that's why a lot of Latinos don't support open borders. So there's a lot to consider here, and we're going to jump to the next topic as there's just so much here to cover. This is something I'm hearing from other tax attorneys, from other professionals. A lot of people are looking and say, look, Trump has a chance to make massive, massive changes here. This gentleman, Cal Thomas, this is an opinion piece, argues for getting rid of or drastically reducing the income tax. If they did that, I'd probably have to go into another line of work, which is fine. I'd figure it out. But a lot of people are proposing a flat tax. There's so many different ways to attack this that I don't think would ever get through Congress. It's too much of an adjustment right now. But when you look at when income tax was first passed in 1909, ratified in 1913, it was just on the top 1% of earners. But World Wars I and II put the country in debt to such a point that currently half the people pay little or no federal income tax, whereas in other states they spend more than half of their income in states like California and New York on income taxes for state and federal. So a lot of people are calling for massive reform to not only address the debt, but change how we're doing these things altogether. Interesting note in this article, and I think this is something that George Bush ran with. So and he tried to reform Social Security, but also Steve Forbes ran for president in 1996 and 2000. And again, he wasn't a candidate from a major political party, but ran as a third party candidate. And again, published a detailed proposal for reforming the federal taxation system. At the heart was reconstructing Social Security while saving it for future generations. How would he do this? And this is the same thing that George W. Bush got crucified over, was and he was going to do no benefit cuts, no tax increases, no more raiding of the Social Security Trust Fund, which, good luck getting Congress not to do that anymore. At the time, Democrats criticized the plan because it allowed people to put a small percentage of their income into the stock market, which he said was unreliable. Is the stock market up, down, all over the place? Yes. But imagine putting money in back in 96 and 2000. Where would your money be today? So, again, it would provide freedom of choice. Do it if you want. Don't do it if you don't want. But the problem is that anytime you do that, it would erode the money going to Social Security that they're relying on. But for newer workers, it would potentially have huge, huge advantages. So if his idea had been adopted, looking at what the market has done since 2000, a single worker mother working who was 25 years old retires in 2040 could have a nest egg of roughly 1.2 million in this account that they suggested setting up. That could pay an annuity of 100,000 annually, which isn't bad for retirement. I mean, who knows where inflation will be in another 16 years, but if you're living on 100,000, especially if you have anything else coming on, and that's nearly twice as much as she would receive under Social Security for paying the same amount. A high school graduate who was 18 in 2000 and retires in 2040 would have a nest egg of $2 million. Again, they blame this on Democrats. I think both parties have to blame. I mean, the Democrats haven't really offered any kind of proposals besides raise taxes, raise taxes, raise taxes. But to get more bang for their buck and really help people out, this is another idea to really change Social Security and make it work for people long term. One of the big concerns I have, this is one of the big problems that we have with 401ks, is that people if it's their money, they access it early. It's not there for in retirement. And again, there's problems with that. So it's not as easy of a solution as you might think. But again, something to think about. So moving on to regulations. And this just came out on November 14th, well past the election. But I think these are really interesting numbers. So this is a $1.8 trillion in regulations, and they're saying 800 times Trump. Let's look at the real numbers, though. And they're claiming the cost of Joe Biden's significant regulations pushed on by all the executive power and the federal government is a whopping $1.8 trillion in cost to American businesses. And they're saying Trump's regulations cost about roughly $1.2 billion. And so if you look at the comparison between Biden, Trump, and even Obama, and Obama was in power president for 8 years. So to be fair to Obama, final cost estimated 1.2 trillion, 2.1 billion for under Trump, and over 8 years, 491 billion under Obama. And then it adds in the paperwork hours to go with it. Again, Trump's paperwork hours is pretty high, but again, the overall cost of these rules is what's really expensive. If you want more details, we're also going to post where this comes from, American Action Forum, and it outlines the number of rules, final rules, total cost, and then more proposed rules. And so how they do this, and again, this is where a lot of the numbers come from. So if you want to go in and dive into this, you can. Actually, I'm not sharing this time. From the American Action Forum. That's where all the numbers come from. You can even play around and look at it by year as you go through the total cost and see what the cost is per year if you go to their site. So next article here, and let me go ahead talking about regulations. I think we were just talking about that. What are some of the regulations coming out? It is a new methane emissions tax just as he's leaving the White House. So this is kind of silly for a couple of reasons. One, it'll probably get reversed as soon as Trump gets into office. But it's starting now, 900 per metric ton fee for methane emissions over specific performances in 2024. We're already at the end of 24. And then in 2025, they'll go up to 1,200, 26, 1,500. So they put all this time and energy to come out with these fees. And this is Administrator Michael Reagan doing it, but they're doing it at the last minute of their presidency, and they know this is going to get reversed. So again, they claim there's a lot of issues, but with this, and the article kind of goes back and forth. 95% or more of the greenhouse gases trapped by the Earth's atmosphere is actually water vapor and carbon dioxide. So again, how much methane is really being stored and affecting any kind of greenhouse gases? And they target oil, but not farming animals, where most methane comes from. And it was interesting. I saw an article where it listed the number of cows, but the number of dogs and cats, and the methane released from just animals, period, far raised the number of cows. So do we target pets next? Who knows? Hopefully we never get there. But again, this is a costly, expensive regulation that's going to go nowhere. Should be reversed very quickly. And talking about this article, I'm going to skip over this because we're running out of time. But last article here, talking about one of the things that is expected to be cut is EV credits, and the plan is to cut them, just eliminate them for the most part. And Tesla's actually lobbying for this, even though they will get hurt the hardest. But their plan, or their thinking, is that it's going to hurt the other manufacturers the biggest, because again, when you take away a subsidy, a prop like that, it really does hurt those that are least financially able to handle it. So if they've been relying on the EVs and they're already struggling with the EV markets, it's going to be a huge issue. So there's arguments back and forth that they need these to compete with China, who's highly subsidized in floating markets. But again, the tariffs will help address that, but not completely. And so again, this article gets into a deeper dive as to whether or not this will actually help our EV producers here in the United States. And even under Biden, though, they're going the other direction now. And they've actually taken a huge bath on EV. They've lost billions and billions of dollars, even though they've been getting EV subsidies. So the subsidies have not compensated them or made up for all the losses they made in production EVs. So no more articles, done with the articles. And when we come back, we're really going to hit and just hammer in on the 5 top things that you need to do to avoid tax issues. But if you have any tax issues, how to get a hold of it, how to deal with it, and relieve the stress, relieve the frustration of dealing with taxes. So we're going to be right back after this next break, answer those questions. And again, everything's going to be posted to our website at guardiantaxlaw.com. And we'll be right back after this break. Welcome back, everybody. And looking forward to closing this out with some great information here. So number one thing on my list of 5 things you should do, and this is a tax attorney trying to help you out the most you can, get informed. So how do you get informed? A lot of people, they know they have an issue. They know there's some kind of problem. They've gotten a letter from the IRS or from the state, or their bank accounts got hit, or they got a tax lien. Something happened and tells them, look, there's something going on here. So what's the first thing you should do? Get information. How do you do that? First of all, talk to a professional. Now, when you're talking to a tax professional, if you feel like you've been put into a high-pressure sales situation, get out. Get a few opinions. Talk to a few different people. If you don't feel comfortable with the first guy, end the conversation. Go somewhere else. Again, if you don't feel like you were informed, if that they were helping guide you through that, or they were just trying to make a sale, call somebody else. So get a few opinions, check out their reviews, see what people are saying about them, and see how you feel in it. If you're uncomfortable or you feel intimidated, have someone go with you. So that's, again, very common suggestion. We do that all the time, is that we will have a third party in on the conversation, someone you trust, someone that can help you understand what's going on if you're feeling overwhelmed. And it is very common to feel overwhelmed. It happens all the time. People tell me, look, I don't understand. Can you slow it down? Can you explain it to me? Absolutely. And we ask people all the time, is there someone else that you would like to have in this conversation help guide you through that? Yes, absolutely. So we'll make those accommodations. If someone isn't doing that for you, get a second opinion. If you feel like someone's telling you have to hire now. I mean, there are a few situations if someone's about to get levied or they've already been levied that where time is of the essence. But anybody that's telling you to make a decision right now and pay us now, get a second opinion. You could always, and today you can get more information yourself. Understanding what to do with it is another issue. But if you have an irs.gov account, you can go and you can pull your transcripts. You can pull a lot of the information. You can call the IRS yourself. Now, does the IRS give a lot of bad information? All the time. I just spoke with someone this week where they called the IRS and they said, well, they told me A, B, and C. I'm like, they don't know what they're talking about. Here's the rules. I can send you the regulations that say these are the rules. And again, the first few layers they don't have a clue. And with all of the new agents that have been hired by the IRS, yes, do they need more agents? Yes. Do they need to train them better? Absolutely. So many of them don't have a clue. When you call in, they mess everything up, give bad advice all the time. And legally, they can't be held responsible for the bad advice they give you. Unless it's in a formal IRS regulation or weekly tax publication, which almost nobody reads. You can't rely on what the IRS tells you at all. So that's why it's so important to talk to a professional. That's point number A here is to talk to a tax professional, get good advice, someone to steer you in the right direction. And it isn't just tax attorneys or tax debt resolution specialists. I mean, if you owe taxes, yes, they're going to give you advice that a CPA and a bookkeeper will not give you because they're coming at it from a completely different perspective. I had someone who's an enrolled agent working for a CPA tell me that he doesn't do offering compromises. He doesn't think people should just be able to wipe out their taxes. I'm like, how are you representing your client to their best interest, not your own opinion, but their best interest? I see people all the time that they got a pickle, they got sick, got laid off, business fell apart, and life happens. Sometimes it's just people that didn't pay their taxes, but a lot of times life just happens, and we help people learn to do better to get the stress off their back. So if you're not working with a good CPA and bookkeeper that will review your rights and your best options for you and help you achieve those, get a second opinion, look elsewhere. Now, one of the things I want to put on there is a lot of firms, they'll just look at where you are. And I'm kind of jumping ahead a little bit. You really should be projecting forward as to where will you be in the future months and how will that affect any tax case. So get good advice, find out where you are. And the first thing you need to find out is one, is the IRS or state coming after you with any collection action? So that's part of it. Are you in immediate danger? If you're not, let's get the information and get you filing compliant. That's number two. You get information and then you get filing compliant, which means you see which returns you need to file. Now, if you either don't have income or you don't have enough income for a filing requirement, you typically don't have to file. However, and I just ran into this, someone not paying estimated tax payments or didn't think they needed to file because they were self-employed. If you make more than $600, you need to file. And as a self-employed individual, I mean, it sounds ridiculously low, and it is. You probably won't owe, but the IRS wants to take and get their Social Security from that. So that's 14.9% that everybody has to pay. If you're a W-2 earner, half of it's paid by your employer, half of it's paid by you, but someone's paying it. And it's a cost of employing people. It's a cost of Social Security and Medicare having these programs in place. So, and that's not going away anytime soon. So make sure you're current on all your tax filings the last 6 years in most cases. There are some exceptions, but generally it's the last 6 years. Right now, come January 1st, it's going to be 2019 to 2024, the specific years, and every year the oldest year drops off. So that's making sure that you're current on your tax filings. So number one, make sure you have a good CPA or a bookkeeper. You talk to a tax professional, a tax debt resolution specialist if you owe taxes, and get informed. And then number two, filing your taxes, getting current, because you can't move forward with any kind of resolution unless the IRS can see that you filed all required tax returns for the last 6 years. Now, can they go further back in some cases? Yes, but again, that's rare. Can states go further back? Yes, they can. So in those situations, can you just file with the state and not the IRS? Absolutely. And there's times that the state debt sticks around a lot more, and states like California is notorious for filing for people going back many, many years. And California often requires that people file much older tax returns and replace the original returns before they'll give you a deal. So you really, when it comes to California and some of the other states, you really do have to file your old returns. Sometimes returns that legally you didn't need to file, you weren't required to file, but if they file for you, you're going to need to get in there and file those returns. Doesn't make the most sense, but again, that's how it works. So get good advice, expert advice first. Get current with your tax returns. And if you own a business, this means TPT, sales taxes. Here in Arizona, CPT taxes, sales tax returns, payroll returns, corporate returns. And you could have plenty of different state returns that need to be filed. The sales tax returns are state returns that need to be filed to make sure that you are not only current. Once you get current, stay current. I can't tell you how many times we get people current. You're good. And then they don't file the next tax returns. Like, we did all this work, we got you here. You need to stay current moving forward. Again, if you owe again or don't file required returns, you will default anything that's set up for you. Third thing here, and this is very, very important, that you are payment compliant. So when you go and you talk to the IRS or the state, it's the same. These requirements are the same. If you're not filing your required returns and showing that you're not going to owe moving forward, the number three thing, they're not going to consider any kind of resolution for you. It doesn't mean that you need to catch up for the full year. Right now, we're in November. So I'm not telling people, hey, you need to pay for all of 2024. That's what the IRS will ask for. And the states will say, hey, well, if you're going to owe, you have to pay the full amount. At this point, most people just can't do it. If you can, great. You'll avoid some penalties and interest. But you'll still get hit with penalties for not making regular estimated tax payments. And I mentioned estimated tax payments because if you're not making enough withholdings, or if you had side income, other income coming in, if you're self-employed, those estimated tax payments are how you make sure you, one, don't avoid more penalties, and two, make sure you're not going to owe moving forward. So if you're behind, you can start right now, start making estimated tax payments, or wait till January. And come January 1st, you want to make sure you're on top of your tax filings. As long as you start in January, you file 2024, and you wrap that in, all the taxes have to be wrapped up in the same basket. Doesn't matter if it's a state or the IRS. There are some exceptions, but that's rare. But pretty much you need to resolve all the taxes together in one big basket. So the way you do that is make sure you're not going to owe for 2025. Make sure you're not going to owe moving forward, that you're going to file your returns, and make sure that you are current on your filing requirements and payment requirements. So next step, and this is really crucial here, and this is very key for most planning. You have to sit down and make a plan. And that's one of the first things we do with people when we first talk to them. We go over their tax issue. What are you looking at? And then we review their financials and discuss a plan moving forward for them. What does this look like? How can we help them? Does someone have tax debt going away that we can just kind of hope we can sit on? We can freeze it for a couple of years and this tax debt just goes away? Or does it make sense for them? In one case, we're doing an installment agreement. And then they're going to be retiring soon. As soon as they retire, then we switch and we're going to look at doing an offer and compromise. We have cases where we're moving assets around so people can rely on, can retire without worrying about property taxes, income taxes, all that stress. Tenants. I just spoke to someone yesterday. They're cash poor but asset rich. Actually, millions of dollars in assets, but they don't have a good plan. And financially, it's killing them. And they owe property taxes, they owe federal, state taxes, a lot of issues going on because they don't have a good plan. We set up a plan moving forward to address the issues facing you, state, IRS, and even sales. And we can help resolve property taxes by getting them paid off. We don't negotiate property taxes, but that's something that needs to be addressed as well. Because what's the point of having a rental or property if you owe property taxes and they can come seize the property? It needs to be addressed, and that those issues only get worse. So we try to lay out a comprehensive approach to clean up someone's finances, get them on a good path moving forward. And my last point, real quick, so far we have get informed, make sure you are current on your tax filings, estimated tax payments, you're paying what you need to for the current year, either starting in 24 or January of 2025. Absolutely make sure you're not going to owe moving forward. Make a plan to tackle your tax debt. And number 5 is revisit the plan. Things change, life changes. We have people that hire us, look like a great offer and candidate, offer and compromise candidate, and then they get a raise, and all of a sudden they're making a couple thousand more a month. They got a raise, good for them. It might blow up the offer, and we might have to go a different direction. Or the opposite happens. I have a multi-million-dollar case right now where someone was making plenty of money, could pay a very large installment agreement, and then that income went away. So now we're switching gears and going for an offer and compromise. So part of this is looking at what is your current situation, what will help you, and what do you expect your situation to be in the near future. And when I say near future, the next couple of years. Long term, something changes, and then we emphasize to our clients, if you're on an installment agreement or you're on our plan, and then you can't afford it anymore, or you come into a bunch of money and you want to get rid of the tax debt, either way that it goes, communicate that with us, and we will be flexible with you to adjust and revise the plan. Now, a huge part of when you're done with this, I'm going to add this on to the planning stage for future planning. The planning shouldn't stop with us. We deal with the tax debts, we deal with the tax issues, so that you are on a path moving forward. You know exactly what to do and how to handle your tax debt. If you ever have any questions, you can call us. But you need to make a long-term financial plan, ideally with a financial advisor or financial coach, or you can work with your CPA or bookkeeper, someone that can help you plan for your financial freedom long-term. And we work with plenty of people that can help you do that and really help you find financial freedom, which is really our goal here, is to be a key part in helping people find financial freedom and make it so their taxes are easy moving forward, so they don't have to worry about it, and they can focus on enjoying life, enjoying retirement, enjoying their family, that's what life should be about, not stressing and worrying about the IRS. So I want to thank everybody for watching. And if you have any questions, go to our website, and we will see you in a couple weeks.